All right. Good morning, everyone. Investment Tuesday. Investment Tuesday today is going to be short, sweet, and to the point. Really. Yeah. We're going to keep this down to, all right, a reasonable period of time. But I have an exciting investment to tell you about. Last week, we talked about rare earths, and yeah, all those stocks, they're moving. So it's worthwhile to come and watch Investment Tuesday. Tell your friends about it. ATG Digital, you can also subscribe. All right. What I want to talk about today is actually crypto related, and it's not about Bitcoin. It's crypto related, and it feels, what's the right word? It feels like something's about to happen. All right. I mean, it feels urgent, right? Like for someone like me that's tracking investments all the time, you can kind of get a sense when the herd, the crowd is starting to kind of charge into something, right? I mean, the number of articles start to rise, the number of mentions in social media starts to go up. You start to see some price action suggesting that some players are starting to push chips in and starting to build some positions, etc. And that's what I sense is about to happen with this particular investment. Now it's in crypto, but I'm going to show you 5 investments that I believe can benefit from this. All right. I mean, some are pretty close and right into it. And some of them, are a little bit on the outside. So which ones will go first? Really hard to know. I'll tell you which one I think will go first. And then we'll go from there. But before I get into all of this, let's do the legal disclaimers and disclosures, which I'm guessing a lot of people just probably scan through, and it's something like sitting on the plane, and when they do those, here's how you put the oxygen mask on, and here's how you put your seatbelt on, and and everybody's got their headphones on, but still, hey, they do it every day, and so I do it every day, and the reason why I do it because after I don't know a decade of doing this, I still get complaints from people. Paul, I lost all my money because I bet everything on one single stock that you recommended. Yeah, well, yeah, we recommend portfolios. Yeah, I mean, the S&P 500 is 500 stocks, and something like 20 of them have carried the S&P 500 for the last few years. So betting on one stock, yeah, it's just a bad idea. It's a bad idea. So this is why, because irrespective of how many times I do this, there's going to be someone that is going to come and bet on something and then come to look to scapegoat and blame me that it's my fault, that I did it to them. Somebody put a gun to their head and forced them to buy. Yeah, no. So for this reason, you get legal disclaimers and disclosures each and every time in huge illustrated detail. I can tell you one more thing. Certainly at my last publisher or any of the publishers, they would never allow me to read something like this, right? Because it might kill sales, right? So, I mean, we, on the other hand, I'd rather and so here we go. This video and the content from ATG Digital. And the content not just means what we write, videos, the portfolios. I mean, they're model portfolios, right? I mean, we put out, these are ideas. They're not guarantees. They're not certainties. Is not investment or financial advice, right? I am not your financial advisor. I'm not your portfolio manager. I do not have a fiduciary duty towards you because I don't know you, right? And there are there are 100 people, 1,000 people watching. Is impossible for me to know what is your risk parameters, what is your financial profile, what is your income, what is your net worth. You know all of that, and so you can figure all this out, right? So whatever I present to you is present to you as opinion, information, engagement, and for those of people that like to come and laugh and find me hilarious, it's entertainment. All right. All ATG Digital content may contain errors, oversights, and mistakes. Understand that investment operations have significant risk. In other words, you could lose money and then can lead to loss of your principal, and that's what that means. And certainly I can tell you all the old school publishers would want nothing to do with this. They would never, because, telling people, I mean, everyone knows this, right? Like speculating, buying and selling stocks, crypto, options, I mean, heck, bonds. You can lose money. So yeah. All right, next. The owners, employees, contractors of ATG Digital, we own, trade, transact in the securities that are mentioned in this video, and all content from ATG Digital. I think that's self-explanatory. We do not take money from companies or crypto promoters, company managements, or crypto promoters to recommend their stocks or crypto tokens. This is now a widely practiced practice. Financial influencers of all kinds do take money and recommend companies, etc. It's pay for play. We do not do this, for better and for worse, for gain and for loss. What you get is our unique, independent point of view. Next, we put out quite a bit of content. Technically, I'm actually like a content maker. I'm not even really like an investment person. That's like what I get categorized by YouTube. I'm a content maker. So we make content. Our Substack is written content, which goes out every day that the market is open. We've got Spotify, which is a podcast, which comes out about every 3 weeks or so. YouTube, I'm on pretty much every single week. Next, social media on X pretty regularly, Instagram infrequently, Facebook occasionally. I think that's I have to remember that. I just made that up on the spot. And finally, we do sell subscriptions to our content, right? And our content takes various forms. We have model portfolios. In other words, these are theoretical portfolios, but these are ideas that we are pushing out and sending to people based on our understanding of the world, our research, our experience. And we've got, a whole set of tiers, starting with silver, gold, platinum, a diamond, and purple tier, and they all do slightly different things. So if you want to check it out, atgdigital.media is where you would go. Subscriptions start at $9.99 per month. Right, so there is a company called Circle, right? And Circle is actually a company that many years ago, I think in the original crypto boom, I put some money into it as a private company. And at one point, I think they seemed like they were about to go bankrupt, but they somehow have made it. And they were one of the original creators of something called a stable coin. For those of you who are not super crypto sophisticated, some folks of you are and some of you are not, a stable coin is essentially a digital, the vast majority of it is digital dollars. And Circle has a digital dollars that goes under the ticker symbol USDC. Now, USDC simply trades for $1. There is no gain you can have for being in USDC. It's no different than owning dollars in your checking account, in your savings account. So there, USDC is not the investment. But Circle, on the other hand, right? This is a startup that started, I'm thinking like 7 years ago. Yeah, that sounds about right. 2016, 2017, when I made this private investment. I was shocked to find out that XRP, which is a cryptocurrency, their management actually was willing to pay, according to what this is saying, as much as 20 billion. Look at that. This is rumors claim that Ripple made a $20 billion offer for Circle. I've seen various numbers for everything from 5 billion to 10 billion, now 20 billion. That's a enormous number. Circle, they've got like a decent amount of money, but Ripple must think that, stable coins are about to explode higher in usage, adoption, utility, popularity, for them to bid $20 billion. I mean, that's a lot of money, right? I mean, I put up this X post. Let's see if I can find it. So this was a few days ago. And I said, yeah, I mean, this was when it was said that, Ripple was going to pay $5 billion. And at $5 billion, I thought that was a pretty good price. So that would be about 3 times sales. So 1.6, $1.7 billion in revenue. I mean, and what is a stable coin? I mean, it's a digital dollar. All right. I mean, it is a substitute for a checking account. It's a substitute for a savings account. It's a substitute for a money market account, except that it's on a blockchain and it sits on whatever, Ethereum. Most of it sits on Ethereum, but there's some that sits on others. But in the end, it's a digital dollar, and it is also a what's called on chain. In other words, it sits on a blockchain. And in that sense, it could be a substitute for a checking, savings, and money market account. Either way, this is what their business looks like. They've got decent profit margins, but XRP, the management of XRP, is willing to pay $10 billion. And the reasoning behind that is that there is actually another company that is private, that has the world's largest stablecoin, which is called Tether, which is widely used around the world. If you travel through Europe, the Middle East, you travel through Asia, you will see signs that say Tether accepted here. It's a well-known stablecoin, and they've got something like, I don't know, 150, $200 billion, right, of stable coin. And they make a lot of money, right? Because the nature of a stable coin business is that you don't need a lot of people. Once the code is written, it's done. And so extraordinarily profitable, right? But they're already the leader. And so, this is a business of scale, and Circle is the second largest one. So maybe it makes sense for XRP to get into this business. Then they would put, I suppose, Circle on the XRP blockchain and then push it out to all their clients. Bottom line, there is a lot going on in the world of stable coins. And if you simply look to see, like, well, what does that mean? Well, one of the things it means is that the volume of stable coins that are trading in the crypto world is exploding higher. If you go and look at this, it says the market cap, which just simply means the total amount of money that is sitting in stable coins, has reached a new high of 220 billion, and transaction volumes have surged to $1.2 trillion in April alone. So that's a 15% jump compared to March. So you got a lot going on, right? First, you've got an IPO coming of a company that for a while people thought might actually go to zero. And they're suddenly getting bids for like multi-billion dollars, right? And who knows what it is. But what those bids tell you is that there is at least one player that thinks that the stablecoin business is a good one, that stablecoin activity is about to explode higher, and they're willing to back it with whatever, 5 billion, 10 billion, 20 billion, who knows what the correct number is. Well, let's just say, well, all those numbers are pretty big numbers for a business that, right now is early, it's nascent, right? It is just beginning. So we've got, this very strong signal, and we've got what we call price discovery. In other words, we are seeing people actually put money down and say, hey, I'm willing to go for this, like put me down, I will buy this. Second, we've got clearly, it's not just, oh, it's going to happen. We can see that the stablecoin market cap, which actually reflects people using stablecoins, leaving money in stablecoins, has reached an all-time high of 220 billion. In other words, this is not like in theory, This is not that like, some pie in the sky might happen. It's happening, right? And then equally, the third confirmation is we've got stable coin volumes. In other words, the trading in stable coins is like rocketing higher. I mean, to go 15% higher month over month is an extraordinary thing. I mean, this thing is, jumping higher. So it looks to me like stable coins are going to be like the breakout idea, trend, theme, whatever the right word is for crypto, at least for 2025. Like clearly things that are associated with stable coins, that's what you want to be. In other words, as money starts to push into stable coins, all of this will just go higher. There will be an even higher market cap in June. The stablecoin volumes will rise even higher. The Circle IPO will come and people will go crazy for it, or else they'll get bought out before they even have an IPO for some big number, which will shock people. It'll be the subject of what everybody's writing about, whether it be on social media or on media in general, which will then drive even more interest for people who will be like, what can I buy? Where, how can I benefit? What can I do? So in today's video, for the remaining few minutes, I'm going to walk you through several investments. I've got three crypto, and then I've got 2 stocks that I believe can benefit from this, exploding trend, theme, potentially mania. I mean, that human beings, we go crazy for certain ideas, and then we just want in. We just like everybody comes to the same idea, same thought about the same time, and then if you capture that, like that all that interest, and it generally tends to all flood into one main idea, like what happened with NVIDIA and AI, a couple of years ago. So we could have something similar happen with stable coins. My best guess is that it'll go into crypto, and some of it will spill into the stock world. So let's go into the number one place, which I'll say is the sort of like the kind of like the safe crypto play. Now, let me put safe in like hard air quotes, right? Every one of you has to know that crypto is incredibly volatile, right? Crazy volatile, right? Insanely volatile. So safe really means that what I mean by that is the most likely beneficiary, right? Is Ethereum. And that's because the vast majority of that 220 billion of like stable coins is sitting on the Ethereum blockchain. All right. So that's the most likely place that you'll see it. From there, the next one is one that I have shared with all of you earlier, which is this Curve crypto. When I made the last video on Curve, this was 45 cents. So it has gone up. How much has it gone up? I wish I could do these like small math things in my head. I can do some of them, but it's up 55% approximately, using 70 cents as the high number. But if you look at a chart of this, you can see like, I think I made the video, 45 cents would have been about here, and we are now at 70. And I mean, the old high for Curve is all the way at 680. Curve is the primary stable coin exchange. And you might be thinking, wow, why does a stable coin need an exchange? Didn't you say, Paul, that it's like a checking account or a digital savings account or like a money market account? Well, it is something that trades. All right. So these stable coins do trade, and they trade primarily on Curve. Now, how they trade, etc. I mentioned in the previous video. I don't want to repeat it. But bottom line, if stablecoin volumes are going up, the fees that Curve is getting are going up. All right. And if there's going to be even more stable coins issued and more issuers of stable coins, in other words, right now, the vast majority of stable coins are Tether, Circle, and then there's a few more. However, imagine like a lot of other banks like Citibank and Bank of America and JP Morgan all come up with their own stable coins because they're like, we don't want to lose our checking and savings accounts customers, these stable coins. We better create our own. Well, all of those will have to trade somewhere, right? And they will end up trading on Curve. So in my judgment, right, Ethereum is where, the stable coins are going to sit. Curve also sits on Ethereum, but the most direct play in crypto on stable coins, my judgment, is Curve. Because, this is what they do. In other words, you want to get liquidity for your stable coin. In other words, when you want to exchange your stable coin, right, for actual cash, right, you got to go through a process. You can't just go and just dump it all in because demand and supply matters, right? So Curve has built now a very proven solution to this. They would benefit in a very big way. All right, let me not belabor that point anymore. Next up is Maker. What is Maker? Maker is actually I believe the oldest stablecoin. Now it is different than Circle or USDC, and it's different than Tether because Maker is a algorithmic stablecoin. Nonetheless, they have something like $5 or $6 billion of stablecoin they're issued. However, it is a critical part of the liquidity of the stablecoin universe. If you want to sell out of, let's say, $1 million worth of USDC or USDT, people will arbitrage between that one and the Maker stablecoin, which is called DAI. And as DAI gets used more and more in transactions on Curve, in other decentralized finance protocols, the amount of fees that goes to the Maker platform starts to go up more and more and more. And with that, more money will also go into Maker's stablecoin, and they might go from 5 billion to 8 billion or 9 billion, which will also increase their fees. So they would be, I would say, like a second order beneficiary of all this movement that is going on. All right. Next, many of you might have guessed, well, USDC is sort of like almost like the unofficial stablecoin of Coinbase. I'm surprised that they haven't bid for Circle, being that they distribute, they're sort of like the primary distribution for Circle. So who knows why they're not willing to bid for it, or maybe they have and we just don't know. But nonetheless, a lot of increase of adoption, utility, popularity of USDC would generally mean that, there's more trading going on at Coinbase, which would increase their trading fees, which would bring more users into the Coinbase universe, and they would benefit as well. And then finally, we got PayPal. And people might be thinking, PayPal, what do they got? Well, PayPal actually sometime last year said, we want to get into the stablecoin business. And they're, of like the bigger companies, like they're among the few that got going last year. And so they've got a few $100 million in it. So if stablecoins start to take off in a very big way, and people start to put a lot more money into it, and also you can see from this search, stablecoin volumes have surpassed Visa and MasterCard. Like, wow. And then there's also legislation that is about to go through Congress on stable coins, and crypto. In other words, we got a lot of things going on, and all of them essentially go in one direction. More usage, more adoption, more utility, more volume, more market cap for stable coins, which means sooner rather than later, you're going to start to see like money starting to hunt this opportunity down, be like, where can I find some action? Where can I, what can I buy to benefit from this? And for my judgment, yeah, Ethereum. Why? Because, well, that's where all the stable coins sit, and that's where Curve, which is the stable coin exchange, also sits on Ethereum. Then we've got Maker, which is the largest algorithmic stable coin. They are the platform that owns that, so they get the benefit of all the fees. Now you got Coinbase, and then we got PayPal. Now there are others as well. I would throw in Uniswap as well as a potential beneficiary, but I wanted to keep it to 5. This is, my judgment, in terms of what would benefit. There are other smaller ones out there that people talk about, but nonetheless, I think stable coins, just given the amount of news flow, actual events like the Circle IPO, and then the legislation, and also that rising market cap and volume, like these are all big signals telling you this is going to be the place to be for crypto for 2025 and maybe even 2026. All right. I hope you enjoyed Investment Tuesday. I want to thank you all for watching and coming, and I will be back next week with another one. This is Paul saying thank you and goodbye.